Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, July, July 25th, 2025. Down here in hotter than Hades, Florida, in late July. So we're in the summer doldrums in the markets, but we're also in peak earnings season. So we've already seen a little tick up in volatility recently. And in the comment section recently, somebody asked my thoughts on something. I said, look, the market's probably not going to do much until the big fangs are out of the way. We had a couple report this week. Next week, I think it's Amazon, Apple, and Meta. So you have a trio, and that'll kind of take things home. NVIDIA is an outlier. They don't report for another month or so. So probably we'll do this kind of slow grind until next week is my guess, unless, something crazy comes out, a tweet from POTUS or anything else that could move the markets. But right now we're kind of in that slow summer doldrums kind of grind mode. All right, what I'm going to do in this video, and I'll try to do it in this order. We'll start out with the equity markets. Just start with the very long-term charts, the monthly charts. That's what we're looking at here. I'll take it down into the time frames, the weekly, daily, 60-minute. I'm going to do it super quick, just going to show you the levels to watch, and I'll hit on the major indexes. And then I'll cover stocks because that's, to me, a very important one. Probably, within, the subsector of technology being by far the most important sector in the market, and then the semis being the most important subsector in tech. We're right up there, really. Of course, that includes NVIDIA. And we'll look at then just kind of roll into the US dollar and related assets. That's gold, silver, GDX, and Bitcoin. We'll get to those. So we're going to do it in that order. All right, so this is my monthly chart. We zoom all the way out on SPY. The SPY was one of the first to market ETFs, came back out here in the late 80s, and so we can go back that far. Of course, I could plug in SPX, but it doesn't matter. What I want to show you here are a couple things to note. We're still above this 20-period exponential monthly moving average. Does a great job of defining trends, bull and bear markets, the major trends. I call it my 401k indicator, and that's still above. We successfully defended it and tested it here. Let me turn off all the lines. Back in this last drop here, we went down intra-month, but that matters absolutely zero. All that matters when you're trading a monthly time frame, which is where I have this indicator, is how you close the month. So we closed the month back above there. We had a bear market here. That was the last bear market. That was the previous bear market. COVID was over before you knew it. 6-week bear market, but a 36% drop certainly qualifies. Q4 2018 drop, and then you snap right back above it. So again, if you just simply moved your money in and out of equities and based on this, you would have vastly outperformed the S&P 500 and sidestepped or profited from shorting all the bear markets and big drops. Best, as always, what tends to happen is, once you flip under, it kind of confirms, but we're usually getting buy and sell signals at the lows based on the shorter term charts, the 60-minute daily, just like we did, back in early April, covering shorts and going long due to the various reasons cited at the time. So we didn't have to wait, and again, it never flipped you on a sell signal either. Look at that last successful defense right there on a back test. So so that one's bullish, but however, I also use the PPO histogram, which is this is the PPO histogram right here, and it just shows the differential or the difference between these two lines, the PPO line, which is the blue line, and its signal line, also the 9 EMA it's called, or nicknames the signal line. It's 9 EMA of the PPO oscillator, price percent oscillator. All right, so you can see we did have big divergent high on both the RSI, PPO. Nothing has changed in the longer term outlook or the technical posture. The markets continue to make these, it's in a marginal new and still very much divergent high. And as I pointed out, the only thing different back then when we had this 27% drop here is that we only had RSI divergence at that time. And this time around, we have both RSI and PPO divergence. We had them both there, 36% drop. Of course, previous bear market back in 08. So that's that. and we're above again that 20 period exponential moving average. However, the PPO histogram remains on a sell signal on all the indexes I have. Again, all that matters is how it closes on a monthly basis. I can tell you it's very close to crossing back over. The reading right now is negative 0.05. So in other words, those lines are poised to cross. We've just crossed on QQQ, but again, we have about a week left in the month. So I really think it's gonna come down to what Apple, Amazon, Meta, what they report next week and what the market does with their earnings. It's either gonna make or break, most likely. I doubt we're gonna continue to just grind around. And so if we get a rejection, it keeps that trend going. Again, you can see, hopefully you can see it if you pause the video, all these, these are the drops off divergent highs, 57%. That's the last bear market, 08, 2007 to 2009, a 57% drop. The one before that, true bear market, was the 2000 dot-com bubble top down to the 03 lows, 51% drop, closer to an 80% drop in the NASDAQ composite. And the other thing is this indicator, the PPO being red, coincides with all the major corrections. You know, these 22%, 15, 20, 36, 27, correction called bear market. Semantics, really. I think the old 20% definition's antiquated. But either way, you can see that one's still there. So we'll see how July closes. If it flips this one green and QQQ green and all the others, and that's just another long-term trend indicator that has flipped back from bearish to bullish. So I'll be watching that one as well. And again, it's one of many. Take them all, collectively. Right now, QQQ, as I just mentioned, well, it's on the 0.6. You probably can't even see it in the video unless you look. I'll zoom in, a little green there. But again, all that matters is how we close next week. So you can see the drops in all the major bear markets and big corrections, double-digit corrections like the one in 2022. Bear market by the definition, 38% drop, 31, 34, all associated with those red crossovers. And then sometimes it does look like you're poised to cross back and you get rejected and have another leg down. So again, this one I'll follow up on the last day of July or August 1st, somewhere around there. Feel free to bump me if I don't, or replicate it on your own chart, PPO histogram. And then IWM, the smallies, same thing, still on the sell signal there, still coming off that big divergent high, and like everything else, just recently tested key trend line or moving average support on the recent lows. And so we'll see where that goes. All right, let me drop down in time frames here, go to a weekly chart. This is what it looks like on IWM. We're just the small caps have been going absolutely nowhere for years now. This goes back, this trading range I just boxed in there goes back to 2020. So the small caps are a lot like airline stocks, where you can hold them for years and they'll have up and down trends within there, but they go nowhere over time. It's one sector known for that. And you can see right now the most salient level to watch is this uptrend line right here off the lows right there. This, if I put up the histogram on the weekly, you can see the PPO line is below the zero line, and that typically when you're below, like right here, it delineates bearish trends, and when you cross above, like you did right here, and you're above it, it delineates bullish trends. So it delineates the bullish and bearish trends. I should say when you're above it, it defines bullish trends. And so I always use the white line. That's the lassitude across. So let's look at the big caps. Let's you know what? I want to go down to the I want to go down on IWM because the smallies present an opportunity here. I think this is major resistance, 226.72-ish. I've had that level here for goodness knows since 2024, and you can see the technical posture, as I've mentioned. A lot of indexes, when we started shorting around the 200s on the kickback rally, remember we're long off the lows, started scaling back into long-term shorts up to but not above, on at least on QQQ, not above the 200s. That was the no ad sign until recently. But as I pointed out, what we have now in all the indexes, which we didn't have, the first divergent high on the PPO RSI down on this daily time frame since back there before that big drop. And as I often say, and it bears repeating, divergence, be it positive, aka bullish, or negative, are not buy or sell signals. They're merely conditions, just like overbought and oversold are not buy and sell signals. You don't just short a stock because it's overbought or buy a stock because it's oversold. They are conditions that are often and usually ultimately followed by a trend reversal. However, you need to get some, buy and sell signals in there, such as breaks of support and whatnot. So on the small caps, IWM, if you're interested, you've had a series of uptrend lines. And they all broke. And we started, we had PPO divergence there. We had correction 1. Then we set up this secondary trend line. All of these, I believe, I've highlighted. We broke that one, but we've been back testing. So really, if you look closely, here's how I see the small caps. At resistance, as I just mentioned, this uptrend line was very well defined. We had a very solid red clear break, and it's been back testing from below. So that trend line is being back tested. I set up this alternate trend line. Not super crazy about it. More focused on the back test there. And again, if it can power on through here and keep going, you're going to, take out these divergences, and then really something else is going on, maybe circa 1999 dot-com bubble with the markets. I don't see it. It's not my view. It's just, this is, the smallies have been going kind of like the market, stalling out, not going down, but not going up, or at least not going up much, moving sideways. So we'll watch that. And remember, they are also rate sensitive. So if I have time, I'll get to treasuries at the end. But I can just tell you right now, what I'm really focused on is the long bond, the 30-year bond, as well, watching the Japanese 40-year. And those are still within what I call spitting distance of breaking out to not just a 52-week high, but literally within decade highs. And that will, I'll use the word not surprised, but outright shocked if we break out and maintain multi-year high yields in the long bond and the stock market doesn't react in a negative way. Anything's possible, but we'll see. All right, so that's that. Take it down to the 60. You can see here's a current uptrend line right there. There's a bearish rising wedge divergence, and that's what that looks like. Let's go back to the big caps. I already did SPY and QQQ on the monthly, just show you the weekly chart. That's it. So we have the PPO signal line on the weekly has crossed back above, and that's net bullish, on that one indicator. We still have, there's no change in the technical posture. I've been talking about it since back here. We had that 22% drop. We gamed that on the way down, exited right at the lows, caught the first half, but not all the rally as far as long-term positioning, and that's it. So we've gone up, made that marginal new high. As I said back then, if we did make a new high, a marginal new high would still be a divergent high and not change the longer-term technical outlook. So that's it. To see it or spin it any other way, it's just not possible. Those are the facts, not opinion. And again, divergence is not a sell signal. It doesn't guarantee a reversal. Sometimes divergences get burned through, i.e. taken out, meaning you move up, and then you no longer have the equal or lower highs on the indicator against higher highs in price. So that's what SPY looks like. I really like that trend line was the best fit. SPY broke down and back tested there. Toggle down to the daily chart. We took out the bearish engulfing candle in SPY, so I'm going to remove that annotation there. There it is. But we still very much on this daily time frame still have the divergences and overbought conditions. And as I've said, if I've said it once, I've said it a million times over the year, breakouts, in other words, this was a breakout to new highs, that occur with these two conditions. Negative divergences and overbought conditions have a very high rate of failure. I'm going to put that rate well north of 80, probably close to 90% plus from my experience. Once in a while, and usually it's going to be like a, an individual stock with a catalyst, like a, let's say a biotech or a high-flying tech stock. Those have a better chance of burning through divergences than the broad indexes. Again, I can't recall a time we put in a, with overbought readings and negative divergence, saw a breakout that stuck. It's typically just like here. That's what that was. And I talked about it at the time, expected it to fail, and it did. And that's what happened. That was a breakout to new highs. It was still divergence I've been talking about, building. And then the technicals played out. And remember, that was long before Trump stepped to the podium. He didn't step to the podium on liquidation day until right there. And then that was my lights out level, and we did that. But then I had to be quick. A few days later, hey, no more shorts. It's just not objective. This whole thing is overblown. Trump's talking crazy numbers that will not last. I guaranteed at the time that the two largest economies in the world, United States and China, would not maintain 200% tariffs and a freeze against trade. It would have collapsed the whole global system. So it was at the very least a no-brainer to stop shorting, whether you went long or not, up to you. But it certainly paid off. And again, we've carried up quite a bit higher than I thought we would or expected initially, but was still open back then to that possibility, and still am now. And you can see it's just kind of a slow grind, volume, a lot of things firing, kind of yellow. I won't call them red flags. I'm going to call them yellow flags. The low volume in the market, of course, that goes with the summer doldrums as well. The things I'm not seeing a lot is credit spreads cracking yet, so I continue to watch that, meaning the differential between treasury bonds and low grade. Muni, I'm watching Muni, some weird, odd things going on in the Muni markets, and I know some of the fundamentals behind that. I don't want to digress right now, so we'll keep an eye on that. All right, so there's SPY, S&P 500, and then QQQ. Let me toggle back to the weekly. I already covered the monthly, talked about that. And this is what it looks like, divergent high and trend line back test. That is, I know this is a busy, what I call a busy board, lots of lines, but this big, thick, very, very well-defined trend line off the 2023 lows. That's really when big tech took off, bottomed here, had about a double bottom, and that trend line's very well-defined, and it broke down. We put in a divergent high there, bearish engulfing. We broke down and simply have been back testing that trend line from below, while extending the same divergences that were in place here when we had that, what was that drop? 27% drop in the NASDAQ 100. The same divergences that were in place that were the technical catalyst for that drop are now not only not taken out, but they're even larger. Therefore, I still maintain my long-term targets on board 8 right here, which is going to be, as I said, about a 50% plus drop if hit, the final target, 53, 54%. And it's just all part of one long-term kind of call, macro call trade, but a trade that I, as an active trader, and again, for the reasons cited, even a long-term trader will go in and out, the reasons, to stop shorting back then and go long. So that's it. We hit T1, T2, we bounced, we went down, we hit my third target, we bounced, and at some point this year, I believe we'll go down to my next targets, either T4, probably bounce on T4. Again, depends how things look at the time. But we need to get some sell signals, and something needs to break here soon, mainly the big techs and this little meme stock thing that's going. The meme stock bubble, that dash or trash going on right now, that does pop when the market pops. That goes fast, so be careful. That's like a game of musical chairs. If you want to play those or you want any charts or opinions, let me know. I'm glad to mark them up. There's some I've been watching and a couple I've been in and out of, but it's in and out stuff. You have to move so fast out of those little crap, I'm talking low price stocks with horrible fundamentals that the Reddit group's pumping right now. All right, so that's long-term daily chart, QQQ. This is it, just drifting up on almost no volume at all. I've talked about my low volume indicators many times in the past. We usually, back in 2022, before the big drop, you get down here, you hit these really lows, this in this range, you come down really low like that towards the top, and then you get a little couple shots across the bow, and then you come back down to this level, this purple line here. So that's it. So this is the extreme low that comes before the top, just like this. You can see the pattern here and these patterns, and then you come down, you get a little shot across the bow. That's what this was, and then you tap that purple line again. That's what you did back there, and then that's usually it. It just means the market's running out of gas. It means short sellers have given up. That's why volume's drying up. They're out of the market. They've given up, and they're waiting for the right time to re-engage. And so the markets are drifting up because there's just not any selling pressure right now. But there's not a lot of vigor in the buying either. That's what the volume shows you there, and that's the same story on the S&P 500 too, guys. You can see we just now tip tap on that purple line, just like back here, tip, and hit it there. You get down there. you get these low volumes, and they're just warning signs that corrections are coming. And you can see really low volume there right before that drop off there. Alrighty, so 60-minute chart. I can't. I don't have any clean trend lines right now in SPY. That's probably the best thing you have right there. Something like that. Okay, again, the big one. I don't know if it's being talked about elsewhere because I kind of do my own thing as far as that goes. I'll follow the mainstream media. I'm not seeing anything picking up there, but to me, I see a very clean, rising. When I say clean, remember the top line is just your divergence line. That one doesn't matter. That can be moved around. This is your uptrend line that defines the trend. Super, super well defined. Nice, clean reactions off it. Breakdown. Moving sideways, and it's moving sideways because there's flows into, again, they're not shorting the broad markets. Traders are, just drifting up QQQ and SPY higher. And so every dollar that goes into Q or a dollar that doesn't come out of QQQ or SPY, that dollar, the lion's share, the bulk of it goes into, or not the bulk of it, but the largest percentage of it, of any stock goes into NVIDIA, because that's the largest component on both SPY and QQQ. It's simple mathematics. And so NVIDIA is also, the 800-pound gorilla in the tech sector. However, as I've went over in recent videos, a lot of other techs have been buckling. And so that's it. So when the big ones, NVIDIA and Broadcom and Taiwan Semi break, and NVIDIA, we did it. Remember, I gave you that we had a sell signal. We bounced exactly as the day I was doing the video. I think it was Tuesday. I said, look, they're going to buy it here. I'd be surprised if they don't. That's most likely where they buy a gap. And so now that level needs to go. So the same video I started on Tuesday highlighting the semis, that same analysis stands. The next sell signal, now we have to take out those lows. And ideally, you don't want to see NVIDIA regain, meaning a solid close back above that trend line. Right now, it's simply a breakdown and a back test, right? Broadcom, breakdown right there, close, little red candle, but the green closed right back on there again. So this is one of those cases I always say, if you have to squint, give it the benefit of the doubt. And all we've been doing is, you call it a breakdown back test, you can call it a riding along the trend line. Again, semantics is so close, it's either one, but not a clear. You want to see us, again, keep it very simple. In my opinion, you set lows or price alerts under all these recent lows on the big ones. And it's, again, a collective thing, not a singular thing. Not even on look, it is on the sell signal, like I said, but I made very clear, not an all-in moment, even though stocks broke down. The all-in moment, if any all-in moment, will be on a break of the recent lows, including SOX, TSM, NVIDIA, and all those. That should, in my opinion, accelerate the selling, begin to accelerate the selling. This right now in Taiwan Semi is a simple breakdown and back test from below. So no change in the technical posture on the semis right now. And again, you have a few select ones holding up, and then quite a few that are kind of sucking wind, especially compared to the sector. There's Texas Instruments. I called that one down after earnings. They reported, and sure enough, it crashed after earnings. Again, you can look at the technicals. The one that surprised me, actually, Intel had one of the better looking charts, but boom, that got smacked down too. So you can see it. That's the story of the semis. If you back out NVIDIA and Broadcom, a couple of the big names, then the sector's doing a whole lot worse. And the other way to see that too is XSD. There's 3 big semi ETFs out there: SOXX, which I already covered, XSD, which is the Spider's S&P Semiconductor ETF. So this one's well balanced, and it's simple stuff. There's nothing 100% in any of this, guys. But look for these divergent highs and lows when you get them, and that's where the corrections come. That's a breakdown back test. And again, you need to take out this low, the post breakdown low. And that's going to open the door to these additional targets there, if and when that comes. The last one is SMH, and same thing. They're all singing the same song: divergent high, drop, divergent high, drop, divergent high, most likely drop to come. All right, let's talk the dollar. Let's just use UUP, the dollar ETF. I haven't updated it much lately because there hasn't been a recent update. I've been watching this very closely, as I've talked about quite a bit. the dollar has been in a massive, at least UUP. You can look at the U.S. dollar index. The chart's a little different, but this is, does a good job of tracking U.S. dollar, and especially when you look short term, you have the divergences are going to look the same on dollar futures. And again, it's that purple trading range, which is major support, long-term support. We came down to that. We have positive divergence. The last time we had a divergent low right here on this daily was right here, and that set this whole trend change there. Oops, I'm trying to arrow tool it here, arrow tool. And there's that, just like that, divergent high, drop, divergent low, rally, divergent high. You can see my divergence lines, right? Drop. That was to support, very oversold, just like this, oversold at support. And we started, we started to rally. Nothing goes straight up. You can see any trend in the dollar is going to have zigs and zags. And so basically we had a bullish falling wedge pattern, breakout, little pullback right there when we took out. Remember, I gave you the minor trend line about a week ago. We took out that trend line right there on a solid daily closing basis. So that was the catalyst for this near-term drop, running up. So these are the levels traders will watch. That recent high, that's a pivot, and this recent low, bullish, bearish, right? And I also want to see the PPO cross above the zero line. That delineates bearish. You see bearish and bullish trends. Here's the cross right here, right there. You look for the white line. I like to last the two to cross. Gave you that bull trend. It told you not to wait for that cross back over because you had a divergent high right there and a sell signal. So this is where you can usually get in front of these. This is just a confirmation of a trend change if we get a solid move back above there. And both the signal line and the PPO line are right next to each other, so they'll probably cross soon together. So if we do this and we hit my first target, that should then do that. And remember, the whole point I'm doing this, you can trade the dollar. There's dollar futures, DX. There's you can short the euro, E7 are the futures. FXE is the euro ETN. UUP obviously the dollar, as we're looking at here. You can go to UDN, which is the inverse dollar, the short dollar, or you can do what I like to do is factor in. And I'll trade those two at times, but you can look at things that are correlated to the dollar, like gold. Gold has been just a dead money trade. Remember, gold doesn't pay you a dividend. So if you're sitting in a sideways trend for months or years, you're not earning any, you're not losing anything, but you're not earning anything. So gold's waiting. Remember, the posture of gold is almost inverse to the dollar. The dollar has that positive divergence, right? And gold has that negative divergence. So if and when, it's my belief that if and when the dollar takes out that recent high, especially if it hits my first target, even more so if it can take out the first target, go to the second target, then that will most likely put pressure on gold, silver, GDX, and even Bitcoin, which as I laid out to you recently, is very much correlated with, or inversely correlated with, the dollar. So that's it. So gold's been a dead money trade. I can probably put a second trend line right here. That's one to watch. You can see off that low. Silver has been playing a game of catch up to gold lately, but you have this trend line right here. So break of that trend line, and then this support right below it, right there. That would open the door to more selling. Big divergent high. That's the thing about silver. If you take a step back, like I like to do, and you look at these weekly charts, this is the bigger picture. This was a blow off top. That was a parabolic blow off top. Those never end well. I've never seen one end well. Look at us, that big drop. That ended with a beautiful, big, positive, bullish divergent low. We went long then. We did it here again. We did it here a couple of these times. That was a divergent low. That was a divergent low right there. That was a divergent high. We had a drop. Here's our uptrend line, which is my next target once this divergence plays out right here. And you can see what's going to be the catalyst. There's a nice clean uptrend line right here off the recent lows, which I think I just showed you on the daily as well. All right, so and you can look at this trend line here. Again, that's a target. And that's going to give silver about, give or take, from that 36-ish level to hit the trend line. If it happens pretty quickly, be about a 27% drop. GDX is a nice short today, or is still now. Newmont, the biggest of the lot, reported today and is up big. This is a rare occurrence for me. I always say that, when I trade and analyze sectors, some sectors have a very tight correlation among the components. GDX is one of those. As I like to say, birds of a feather flock together. Then you have things like the biotechs that have an awful correlation because their business models and pipelines are different. Some biotechs might have a blockbuster or 2-3 blockbuster drugs either in the pipeline or just approved. Others that might have had everything, was a one-trick pony and everything was riding on this big hopeful blockbuster drug, but all of a sudden in phase 2 clinical trials, people were dropping dead and they had to yank it, and that company will collapse. Those biotechs and again, some biotechs are working on cures for X and others are working on drugs for Z or Y. And so, but however, this is unusual. And again, it's Newmont reported, and it's up 5.7% today. But look at this. Everything else, KGC is almost flat, all red. And that is unusual. And so that is giving GDX, because Newmont's the biggest one in there, a false guise of strength. And so let's take a look at these charts. I just wanted to show you that's what's standing out today. And again, it's all about gold, GDX and silver. GDX will not drop or drop very much without gold and silver going down. I already just spent time giving you my analysis on those charts. And this one I've been telling you recently needs to take out this level right here, 50.78. Very nice support. We've been dancing on it. And if so, that's going to open the door. I might have given you some targets on that. Did I? We've shorted this, or gone long and short this one so many times in the last year. This is what it looks like on the 60 right here. Yeah, that's right. In the recent videos, I covered this line here with blue. I don't know here. Here's my blue line here. This one right here. I told you last couple of weeks we need to break that level to open the door for more selling, and then GDX should get going. There it is. The divergences have just gotten larger. Again, it's being held up, giving it a false sky. I mean, it's down today, but not much. If you back Newmont out, you'd see it a lot more because, like I showed you, all the other components are red. So let's just look at that real quick. Newmont right here. This spike high today is simply extends the negative divergence in place on Newmont. Last time we had a divergent high was right here. That was the drop. Time before, well, not that we had a big one there, drop, bullish, divergent low, rally, divergent high, drop, divergent low, rally, trend line break, drop, divergent low, rally, divergent high. Again, you can see all these lines here, drop, divergent low, bullish, rally, and that's it. So, we don't have a sell signal or anything remotely resembling a sell signal. It just punched to a new 52-week high, but a 52-week high that, in my opinion, is likely to fail. If the miners happen to have a bad day on Monday, which is one thing to look for, you could see an island top. That's a candlestick separated. If we gap down on Monday on Newmont, and it leaves that candle there all alone with gaps on both sides, that's a high probability short entry there. You put a short with a stop above the recent high, and then you can see that's one target there. And, we'd get a trend change. So it'd probably be bigger drop than just that. And again, I've already gone through the miners in recent videos, and this is what it looks like. And you can reference any of the recent videos and see. You just have these trend lines that I highlighted. I'm just extending. They haven't been broken yet. So you've got some of them have. Some of them are broken down already. Others have yet to break down. But again, if and when gold and silver, again, drop, especially if the dollar starts to rally, yeah, you're going to have a lot of bang for your buck on these guys. Until then, they're just a lot of them are just kind of waiting. Just like gold. Remember, gold's in this wait and see kind of sideways grind, and some of these miners are as well. All right, and the other thing, IBIT, or let's look at GBTC because we have a longer trading history on that to view Bitcoin. That's it. So, right now, what can I tell you definitively? Divergent high. We had a divergent high right here. We had one right here. We had one right here and right here. That led to that drop. And look, we've had plenty of divergent lows, which I've highlighted, and we've had longs. The last long entry was on the April lows, right here, right there on that breakout. We did IBIT and covered. We had, remember, we were short Bitcoin going into that, and then covered everything, including the cryptos right after, put those on as long ideas. And that was, again, off a, when you zoom in, you see the nice downtrend line, bullish falling wedge, positive divergence. But the bigger picture is you have this much larger, longer building. So you're going to get, this is what swing trading is about. This is trend trading here, this larger trend that's setting up, big divergence on Bitcoin. And as I've mentioned and showed you before, Bitcoin has a pretty high inverse correlation with the dollar because it's priced in US dollars. So when the dollar starts to rise, it takes fewer dollars to buy an ounce of Bitcoin, or I'm sorry, a token or whatever you call it, a Bitcoin, and or a fraction thereof. And when the dollar falls, it's going to take more dollars. So a falling dollar, which we've been in, is bullish for Bitcoin. And if you want to see that chart, if you're new to the site, I'll post it. I already marked it up, and I don't have it queued up right now. But we're not going anywhere until we break. There's your trend line right there, uptrend line. So we need to break that. See the divergence there. We had a divergent high there, and we had a nice correction. Again, we shorted that correction. We covered right off the lows and we went long. This is, the next setup is going to be to the downside is what I see more before the upside. I haven't marked that. That was, I guess, we used IBIT last time, so let me go to that. We can go short on the 60-minute chart. So that was it. We shorted this one up here somewhere. We hit my first, second, third targets. But at that point, we almost hit T4, but on the right at the April lows, I mentioned cover all shorts, everything, go to full long position. And then we broke out, and I added this one on somewhere in here as a trade idea. Might have been on the daily chart, wherever the targets were. And we've come full circle. We had a divergent high there. We had a little correction. The divergence has gotten longer, and we still have divergence. We just broke that minor trend line there. So again, it's going to be whether this does this or this, I think, will be largely, not necessarily exclusively, but largely dependent on what the US dollar does. All right, let's wrap it up here. I'll get the video out to you. As always, if you have any questions on any of the recently highlighted trade ideas I've shared, or anything you want your own opinion on your own chart, something, just throw it in the comment section. Just post a question there, and I'll get back to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great day.